Good day, traders. Stacy Burke from Stacy Burke Trading today, talking about timing the market, not time in the market. Received a ton of questions this last week, every single day, about level 3, about the opens, about the 1 hour, don't counter trend, all these things that just people are asking me questions that are really completely a lot of unrelated stuff that I think the concept has been passed. I want to be there at the screen for 1 hour at the opens, find the best opportunity, trade that opportunity, and be done. And again, my goal is income production, not to get as many pips as I can or anything else. My goal is to find the best scalable trade setup, take that trade, whether it's a scalp, reversal trade, whatever that may be, a level 3 or just a 25 pip scalp. We'll decide how much risk I put on that trade, all those things, but I'm there to make money, and then I get off the screen. Now, as one trader reiterated to me yesterday, they made a great trade, they made money, and they lost almost twice as much later because they hung around and kept trading. And you've heard me say this over and over and over again. Once I'm done, I shut it down because I'm not there to try and get pips. I'm there to make money. Timings, just to review. These are all New York Eastern Standard Time, so wherever you're at in the world, just Google it. I don't know what time it is in Djibouti, so you'll have to Google it. Asia, 8 to 11 p.m. Europe and London, 2 to 5 a.m. New York, 8 to 11 a.m. Yes, there's going to be movement outside of these times, but I'm not going to be there. So I'm coming to the screen, reproducing my timings, and I'm looking for the pair that sets up the best for that trade setup. Working from the higher low of the day or the session, engulfments, pin hammers, 3 pushes, triple tops, final flags, M's, W's, etc. If you are still having trouble understanding what those look like, go back, review my old videos. There's 1,000 videos in there. Print your charts off. Study them. Look at the patterns. Don't ask me if this will work on this market. Go test it yourself. I can only show you, and I'll emphasize, I could take any market and find these patterns. Every single market shows these patterns. Do they show them every single session? Of course not. Do they show them every single day? No. Certain instruments do because the volatility and the volume is there. Other pairs may not. There may be news on the calendar that will affect a group of instruments, whatever that may be. That's why you'll follow a basket. If you're following just the majors, you may only get 2 or 3 really, really good setups over the week. But there are a lot of other session opportunities where they'll offer 25 pip scalps or reversals or something like that. But again, you have to know exactly what you're looking for. I'm looking for pump and dumps. That's what I like to specialize in. I can spot them. I trade them well. They are very reliable and reproducible and consistent. Do I trade it every single one on the same pair every single session? No, I look for the best setup. If one pair seems a bit funny, or I can't quite get a feel of how it's setting up, well, then I may just avoid it altogether and may not trade that session. Major round numbers, double zeros, 50s, 75, and 25. Okay, if you're not sure what this is, I'll just type this in here. That is the price. The price, the price, the price. I think I've received at least 100 emails asking me, where did you get this from? Where did you make this up from? It's the price. I'm not making anything up. It's the price. Risk management. If I'm at the high of the day and I'm getting in on the 3rd level or on a quarter level, gold, NASDAQ, oil, it's going to be the maximum of 25 cents because these trades should move right away. As one trader last night will look at gold. Again, I had 7 or 8 emails within 45 minutes of that market collapsing of people who said to me, I finally see what you're talking about. I took that trade. I watched it go up. I got in and it fell. And in 14 minutes, I made 50 pips or 75 or 100, depending on how far they took it. That's how fast it happens. That's how long I want to be in the trade. And when you're right, there is no retest into your stop or anything else. The market runs away because it's already set up to go. So your stop will vary. Obviously, could it be a little bit less on majors? Your profit target will vary depending on the pattern of the trend and the instrument that you're trading. Obviously, you may be going for a bigger profit target on gold, oil, or NASDAQ or any other index. Maybe not. The volatility may be not any larger. Some of the majors, it may only be a 25 pip box movement. If it's 3 levels, Again, should be 50 pips. Depends on the pattern of the trend. If you're scalping against a strong market, you may only get 25, but you're holding on for 50 and they'll come back and all of a sudden you get nothing. So know in advance, plan your trade. Somebody said, do I need to write a trading plan for every trade? No, you have a trading plan, but you need to plan every trade. So before I get in, I have an idea of where I'm getting out. And if I get out early or if I leave some money on the table, okay, how could I have recognized that that trade was going to give me more? Next time I want to do it better. So I want to squeeze the most out of a winning trade. I want to make sure that I lose as little as possible on my losing trades. These trades are scalable. So again, I am focused on reproducibility and scalability of a setup. I'm not trying to catch a move. So I'm getting, some emails and stuff about, I'm getting charts with like EMAs and RSIs on them and everything else, and where do I think it's going? That's not how I'm trading. I'm there looking for setups. I'm not worried about how many pips I can get. Yeah, I'd like to get as many pips as I can at as large a size as I can, but I'm looking at setups that are scalable, that are high probability, where my edge is expressed, and they offer me the opportunity on certain ones to maybe increase size and still control my risk. Still have a limited downside, but an increased upside. Increase that size, repeat, and again, reiterate. Get off the screen. People, I am receiving a lot of emails telling me, oh, you missed this move and you missed that move. You've missed my approach to the market. I don't care about missing moves. Missing moves is your perception. I haven't missed anything. If I quote unquote missed a trade, that's my own fault, but I didn't miss out on anything. If I go and try to make up for that or do something where I try to catch other moves, that's where I go outside of my trading plan. That is my trading plan, is to stick to this 1 hour window where I have the highest probability setups, take the trade, manage my risk, take as much out as that trade offers me, and then get off the screen. We talked about this oil trade yesterday. Again, they brought it down, locked in the zeros in the bottom of a 100 pip box, level 1, breakout pullback, creeper in. This is an uptrend on the longer time frame. Oil goes vertical right off the open for a continuation move straight up through the high. So again, pattern within a pattern, 3 little pushes at the very bottom. I'm not going to go into detail in these charts because I want to go over the setups and I want to show people how often they occur. Later in Europe, we had the same thing, 3 levels of rise. These are trades I did take. 3 levels of rise. Okay, and spotting little things. This is a 1 minute chart. Okay, now notice the gap. There's a 50 pip box. They take everybody up first before they go and auction back and forth. We had 3 levels, 3 pushes, 1 push, 2 push, and a 1, 2, 3 into the high and engulfment. Okay, as soon as they came down on the second shoulder, I was shorting it just into 75. I got out at zeros. I knew this trade had the potential to go further, but we had a breakout underneath the zeros with peak formations, and I thought, I'm okay with 70 pips. I'm going to take that, call it a session. This morning in Europe, again, they brought everything down to the lower quarter. Trap lower level shorts right off the bat, and again, there's our 50 pip lift. So again, if you're trading these more volatile pairs, that space is a dead giveaway. They're going to do the pump and dump. They're bringing everybody up higher first. The 25 pip extension plus is a false break above the 00 box. I'm not going to go into detail with that in this video. Go study Bill McLaren, 25% extensions. They locked in the high prior to the session opening. This is a first bar trade right into the open this morning for 100 pips straight down back to where the move began. This trade was 14 minutes long for 100 pips. Done. Call it a day, come back later. Okay, gold took out the high of the previous week and the high of this week. Went vertical. Pre-market, again pre-market. Probably within 10 minutes of this trade finishing, I started receiving emails. People had locked in 50, 75, 100 pips. They couldn't believe it. They were like, this is just exactly what you've talked about. This is pump and dump. And this is exactly it. The market goes up 3 levels. Obviously, it'd gone 150 pips, but they get to 0. They go 25, 50, 75, third level. And we get 1 push, 2 push, 3 pushes into the high, and engulfment of the high bull candle. This is the first 15-minute bar, so understand time compression. At the end of this 15-minute bar, we have a break in structure and a lower low. This little bear candle pin is at 13 minutes. I'm in the market at 50 after we're coming down, and I'm holding this all the way through. Took some off at zeros, 75 and one trailer. 50, that's a 100 pip box. We had a peak formation below 50. This is also an uptrend on the longer time frame, but these sloping higher lows are a giveaway. They're going to get cleaned up in the stop hunt to the low. Whenever anybody is getting caught chasing a move in the middle of a box, they're going to become low-hanging fruit for a stop hunt later on. 3 levels of rise, 1 push, 2 push, 3 push. Consolidation out of a level 3 move for a level 3 move back down. Same thing the previous day. We talked about this trade yesterday. We had third level. Market locked in the low below 50 and got traders trading back into the high at the beginning of the Asian session. Traders shorting that, making our M, and then we get a break in structure for a triple top reversal in the upper level 3 for a 75 pip move back down, which was a stop hunt on breakout traders on the longer time frames from the previous day's high. This trade was over. You had 50 pips in half an hour, but it continued down for another 30, 35 pips. But again, you're in the money right away. Pretty much, depending on where your fill was, there was very little stress at all on traders who were shorting this. I'm going to go through a couple of the major pairs, and just again, you can go through your own charts. We see the market put in a peak formation the previous week. Coming out of the third level, it dropped down. We have a broken down market heading into the new week. The market trades up into level 3 on Tuesday. Peak formation. So again, if you're not sure what a peak formation is, go back, print your charts off, look at the highs and the lows of the week. They'll be peak formations. They come into level 3 and drop it down. Creeping trend back up into the midpoint of our 100 pip box. Again, the 50% level. For a sell, again, go back, look at the time frame. This is right in the U.S. session. Boom, 50 pips down. They come back yesterday and put a peak formation in London and drop this market down. So high of the day, high of the session at the end of the 3-hour window. But today, again, first open of the Asian session, a continuation into the new 00 box for a fast 25 pip move down in a broken down market. This market is already down. It's broken down. It's broken down. It opens below the 00s. Zoom in. The high was locked in before Asia opened. Pop-up, engulfment, pullback, straight away for 25 pips down into the next quarter level box. We have a screaming bull market on the Japanese yen. Again, zoom in on these charts. Look for markets that go vertical into the ends of session. We come out of last night's U.S. session. They bring the market up 75 pips. 75 pips. 1, 2, 3 levels of rise and go into consolidation above the quarter level. Above the quarter level. So again, we have a gap. There's a space. There's a space. There's a high probability they might give us a sell setup heading into the open of the session. When we go to the 1 minute, we can see this 25 pip box is clear sailing. They've gone vertical, gone into consolidation. They've hit the previous day's high this morning. They've engulfed the high. Okay, so again, print off your charts. Once I have my thesis, I'm using the 1 minute chart. If you're getting in on the 15 minute, you're getting in somewhere down here. I want to get in at the top. Once I know this is locked in, I'm in. I'm taking some off. I might get back in. This market's still falling. I get back in. Maybe it's going to keep going. Chances are, if I'm in this market, 25 to 50 would be my limit, knowing that the yen possibly might not have continued to fall. But it's Friday reversal. We've had a trending 3 weeks of rise. This is textbook perfect. Print this chart off. You'll notice they took out the lows of the U.S. session. Everybody who's been long from London on up has been caught up high. They've taken everybody out. And to go back to yesterday's video, just to reiterate, do not counter trend a level 3 trade. People are counter trending this. Oh, but the trend is up. The trend is up. They get stopped out, they get in again, they get stopped out, they're holding on and their loss is getting bigger, and this may not come back. We don't know. We're at the high of the month. We're at the end of the month. Traders who are long up here, if they're holding on, they may be holding on to that for a while. So keep it simple. Don't get caught into counter trending a level 3 trade. We went through the British pound pairs in a couple of previous videos. Again, we had 3 levels of drop: 75, 50, 25. U.S. session for a vertical move. Straight up. Now again, we're trading down into the low of the week or the low of the day. So this is a thesis. Once I have my levels, I'm going to the 1 minute and then understanding timing. 1, 2, 3. We talked about this. So around the 45-minute mark, I'm looking for, again, price is going to confirm that, but this is a level 3 opportunity right at the beginning of the U.S. session. The same thing the next day. Asia, London, New York, level 3. Vertical move, U.S. session, 50 pips. They come down 3 levels into the London Open. We have a level 3 trade opportunity. It goes 150 straight up into the next day. They bring so just like we talked about on the Japanese yen, they bring this up a whole nother level. There's a gap. We've got higher level longs chasing the move up. That's the dead giveaway. You could be looking for a reversal opportunity heading into the session. They get people chasing the move up into the high of the week. Pull it back. They retest the high. 1, 2, 3. They pull it. They start shorts. London opens and pins up into the shorts that are in first and continues to fall 75 plus pips down. Canadian dollar is a broken down market. It's been continuing to fall. It fell to double zeros, auction sideways before breaking down and finally pulling back on Wednesday. We have 3 sessions. Asia, London, New York. 1 push, 2 push, 3 pushes. I'll zoom in a bit. Go print these charts off. Study the patterns. 3 pushes into double zeros on the upper level. We're in level 3, above 75. Pushing into zeros in a broken down market. 1 push, 2 push, 3 push for a 50 pip move down. Next day, same trade. Asia, London, New York. They break down in the gap time. 1, 2, 3 to the high, to the numbers, into the peak formation. Okay? For the vertical move of 50 pips back. So keep it simple, traders. Look for opportunities. They're everywhere. I'm looking for markets that I can get into. The opens of sessions, whether that's London, New York, Asia, higher low of the week, or a broken down market where I know traders are trapped. Everybody above here who's gone long, they're up inside of the move. As soon as this move fails, they're all caught. This has to go down, and it's already a trending market. 3 sessions, 1, 2, 3s. Asia, London, New York, it's the same type of situation. 3 levels of rise, 3 levels of fall, level 3 trade opportunity from 75 down into level 1. Keep it simple. End the week strong. Make sure you do everything right today. Wake up tomorrow knowing that you've done everything right and you've had a great week or a great end of the week. And next week, do it better. Have a great trading session, and may the markets go.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.